Hello everyone, welcome to my YouTube channel. In this particular video, let us discuss some of the section B questions, important questions from the second chapter in financial institutions and markets, that is capital market and money market. The second chapter name is capital market and money market. In that, let us discuss some of the section B important questions. First one is difference between money market and capital market. So let us first discuss that question. So maturity period, we all know that money market, the maturity period of the securities will be less than a year. ಒಂದು ವರ್ಷಕ್ಕಿಂತ ಕಡಿಮೆ ಇರುತ್ತೆ maturity period. Whereas in capital market, the maturity period is more than a year in capital market. Instruments. So money market instruments are call money, treasury bills, certificate of deposits, commercial papers, similar, etc. Many are there. In capital market, we have shares, bonds, debentures. These are all the instruments that is used in capital market. Next, nature of the instruments. Say money market is homogeneous. Homogeneous means it is equivalent to money. The instruments are equivalent to money. Whereas in capital market it is heterogeneous. Means it is a combination of equity and debt. So this is heterogeneous. It is different. But in money market the instruments are homogeneous because it is money equivalent. Almost it is like money itself. Next, what are the institutions involved in money market? We have central banks, commercial banks are there. So those are all the institutions involved in money market. In capital market, stock exchanges comes, and we do even have NBFCs like insurance companies, mutual fund companies. Those are all the institutions involved in capital market. Next, what is the purpose of money market? It is to satisfy or cater the short-term needs of the business. So the business may require certain emergency amount or the working capital. So to all these short-term needs, in order to cater this short-term needs, money market is required. ಸಣ್ಣ ಪುಟ್ಟ ರಿಕ್ವೈರ್ಮೆಂಟ್ಸ್ಗಳಿರುತ್ತೆ ಕಂಪನಿಗೆ, ಅದೆಲ್ಲವುದನ್ನ ತೀರ್ಸೋದಕ್ಕೆ ಮನಿ ಮಾರ್ಕೆಟ್ ಬೇಕಾಗುತ್ತೆ. ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್ ಇಸ್ ಫಾರ್ ಲಾಂಗ್ ಟರ್ಮ್ ನೀಡ್ಸ್. ಸೊ ಬಿಸ್ನೆಸ್ಗೆ ಲಾಂಗ್ ಟರ್ಮ್ ಕ್ಯಾಪಿಟಲ್ ಬೇಕಾಗುತ್ತೆ. ಹೊಸ ಬಿಸ್ನೆಸ್ ಎಕ್ಸ್ಪಾನ್ಷನ್ಗೆ ಅಥವಾ ಏನಾದ್ರು ದೊಡ್ಡ ದೊಡ್ಡ ಮಷಿನರೀಸ್ನ ಬೈ ಮಾಡೋದಕ್ಕೆ ಲಾಂಗ್ ಟರ್ಮ್ ಕ್ಯಾಪಿಟಲ್ ಬೇಕಾಗುತ್ತೆ. ಅದಕ್ಕೆ ಮನಿ ಮಾರ್ಕೆಟ್ ಇಸ್ ದ ಪರ್ಪಸಸ್ ಆಫ್ ಮನಿ ಮಾರ್ಕೆಟ್ ಇಸ್ ಟು ಪ್ರೊವೈಡ್ ದಿ ಲಾಂಗ್ ಟರ್ಮ್ ಕ್ಯಾಪಿಟಲ್. ರಿಸ್ಕ್ ಆಸ್ ಕಂಪೇರ್ಡ್ ಟು ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್, ಮನಿ ಮಾರ್ಕೆಟ್ ಇಸ್ ಹ್ಯಾವಿಂಗ್ ಲೆಸ್ಸರ್ ರಿಸ್ಕ್. ಮನಿ ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ ಕಡಿಮೆ ರಿಸ್ಕ್ ಇದೆ. ಬಟ್ ಇನ್ ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್ ದ ರಿಸ್ಕ್ ಇಸ್ ಹ್ಯೂಜ್. ಪ್ರೈಸ್ ಯಾವಾಗ ಬೇಕಾದ್ರೂ ವೇರಿ ಆಗ್ಬೋದು. ಇವತ್ತು ಜಾಸ್ತಿ ಇರೋ ಶೇರ್ ಪ್ರೈಸ್ ನಾಳೆ ಸಡನ್ ಆಗಿ ಕಮ್ಮಿ ಆಗ್ಬೋದು. ಸೊ ರಿಸ್ಕ್ ಇಸ್ ಟೂ ಮಚ್ ಇನ್ ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್. ಬೇಸಿಕ್ ರೋಲ್, ದ ಮನಿ ಮಾರ್ಕೆಟ್ಸ್ ಬೇಸಿಕ್ ರೋಲ್ ಇಸ್ ಲಿಕ್ವಿಡಿಟಿ ಅಡ್ಜಸ್ಟ್ಮೆಂಟ್ಸ್. ಸೊ ಶಾರ್ಟ್ ಟರ್ಮ್ ಆಸ್ ಐ ಟೋಲ್ಡ್ ಯು ಮನಿ ರಿಕ್ವೈರ್ಮೆಂಟ್ಸ್. ಸೊ ಅರ್ಜೆಂಟ್ ಆಗಿ ಮನಿ ಬೇಕಾಗಿರುತ್ತೆ. ಸೊ ನೀವು ಸೆಕ್ಯೂರಿಟೀಸ್ಗಳನ್ನ ಇಶ್ಯೂ ಮಾಡ್ತೀರಾ, ಮನಿನ ಕಲೆಕ್ಟ್ ಮಾಡ್ತೀರಾ. ಇವನ್ ಇನ್ವೆಸ್ಟರ್ಸ್ ಆಲ್ಸೋ ಒಂದ್ ವರ್ಷದೊಳಗಡೆ ಅದ್ರ ಸೆಕ್ಯೂರಿಟೀಸ್ ಎಲ್ಲ ಕ್ಯಾಶಿಗೆ ಕನ್ವರ್ಟ್ ಆಗುತ್ತೆ. ಸೊ ಲಿಕ್ವಿಡಿಟಿ ಇಸ್ ಎನ್ಶೋರ್ಡ್ ಇನ್ ಮನಿ ಮಾರ್ಕೆಟ್. ಬಟ್ ಇನ್ ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್ ದ ಮೇಜರ್ ಥಿಂಗ್ ಇಸ್ ಪುಟಿಂಗ್ ಕ್ಯಾಪಿಟಲ್ ಟು ವರ್ಕ್. ಇಟ್ ಇಸ್ ರೇಸಿಂಗ್ ಕ್ಯಾಪಿಟಲ್ ಅಂಡ್ ಯೂಸಿಂಗ್ ದಟ್ ಕ್ಯಾಪಿಟಲ್ ಫಾರ್ ಯರ್ ಬಿಸ್ನೆಸ್ ಪರ್ಪಸಸ್. Next, relation with central bank. So it is closely and directly related to central bank because RBI also certain times it will issue treasury bills on behalf of government also. So central bank, RBI regulates the money market. Then what about this capital market? It is indirectly. RBI doesn't regulate directly. Indirectly it regulates the capital market. Next, market regulation. So commercial banks will be regulated. RBI will regulate these commercial banks, whereas these institutions are not that much regulated. So in capital market, the institutions are not that much regulated. So in money market, the transactions takes place over the phone. In phone call only you can do the money market transactions. There is no fixed or formal place for money market. But capital market, the transactions takes place only through stock exchanges. We have National Stock Exchange, Bombay Stock Exchange. In these stock exchanges, the transactions take place in capital market. So in money market, there is no need for brokers. Brokers is not required in money market, but in capital market, the brokers are required. So this is the differences between money market and capital market. So it is a very easy question actually. Next, one more question we can expect, that is explain the players in capital market, or they may even ask about the intermediaries. So I have not given the full explanation in the document. I have simplified it by points so that when you before going to examination, if you remember these points, you can easily write the answer with your own explanation. So these points you should remember. So first one is corporations. Corporations are the institutions which requires money. So corporations ಯಾರಿಗೆ capital ಬೇಕಾಗಿರುತ್ತೋ ಅವರು corporations ಆಗಿರ್ತಾರೆ. These corporations will issue the securities. ಇವರೆಲ್ಲ ಸೆಕ್ಯೂರಿಟೀಸ್, ಶೇರ್ಸು, ಡಿಬೆಂಚರ್ಸು, ಬಾಂಡ್ಸು ಈ ಕಾರ್ಪೊರೇಷನ್ಸ್ಗಳು ಇಶ್ಯೂ ಮಾಡ್ತಾರೆ. ಇವ್ರನ್ನ ಇಶ್ಯೂಯರ್ಸ್ ಅಂತ ಕೂಡ ಕರಿತೀವಿ. ಕಾರ್ಪೊರೇಷನ್ಸ್ನ ಇಶ್ಯೂಯರ್ಸ್ ಅಂತ ಹೇಳಿ ಕೂಡ ನಾವು ಕರಿತೀವಿ. ಸೊ ದೀಸ್ ಆರ್ ಆಲ್ಸೋ ಒನ್ ಆಫ್ ದ ಇಂಪಾರ್ಟೆಂಟ್ ಪ್ಲೇಯರ್ಸ್, ಯಾಕಂದ್ರೆ ಅವರೇ ಇಶ್ಯೂ ಮಾಡೋದು ಸೆಕ್ಯೂರಿಟೀಸ್ಗಳನ್ನ ಕ್ಯಾಪಿಟಲ್ ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ. ನೆಕ್ಸ್ಟ್ ದ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್. ಸೊ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್ ಆರ್ ದ ಪೀಪಲ್ ಹೂ ವಿಲ್ ಇನ್ವೆಸ್ಟ್ ದ ಮನಿ. ಸೊ ಕಾರ್ಪೊರೇಷನ್ಸ್ ಇಶ್ಯೂ ಮಾಡ್ತಕ್ಕಂಥ ಸೆಕ್ಯೂರಿಟೀಸ್ಗಳಲ್ಲಿ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್ ಏನ್ ಮಾಡ್ತಾರೆ, ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ತಾರೆ. ಆ ಸೆಕ್ಯೂರಿಟೀಸ್ಗಳನ್ನೆಲ್ಲ ಕೊಂಡ್ಕೊಂಡು ಮನಿಯನ್ನ ಕೊಡ್ತಾರೆ. ಸೊ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್ ಅಲ್ಲಿ ಯಾರ್ಯಾರು ಬರ್ತಾರೆ ಅಂದ್ರೆ ಫಂಡ್ ಮ್ಯಾನೇಜರ್ಸ್, institution investors, and retail investors are like people like us are the retail investors. Some institutions will be there to invest. So those are all the institutions who are ready to invest the money. Investment banks. Next in player is investment banks. So one side we have corporation who wants the capital. One side we have institutions who have the money who will buy the securities. The link between both of them, or the intermediary between both of them, are the investment banks. Corporations ಮತ್ತು institutions ನಡುವೆ ಲಿಂಕ್ ಕ್ರಿಯೇಟ್ ಮಾಡೋದೇ ಈ ರೀತಿಯ ಒಂದು ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಬ್ಯಾಂಕ್ಸ್. ಸೊ ದೀಸ್ ಆರ್ ಆಲ್ ದಿ ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್ ಇಂಟರ್ಮೀಡಿಯರೀಸ್. ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಬ್ಯಾಂಕ್ಸ್ ನಾವು ಮರ್ಚೆಂಟ್ ಬ್ಯಾಂಕರ್ಸ್ ಅಂತ ಕೂಡ ಕರಿತೀವಿ. ನೆಕ್ಸ್ಟ್ ಪಬ್ಲಿಕ್ ಅಕೌಂಟಿಂಗ್ ಫರ್ಮ್. ಇವ್ರನ್ನ ಕಾರ್ಪೊರೇಷನ್ಸ್ ಹೈರ್ ಮಾಡ್ತಾರೆ. ಸೊ ಕಾರ್ಪೊರೇಷನ್ಸ್ ನ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ಸ್ ನ ಆಡಿಟ್ ಮಾಡೋದಾಗಿರ್ಬೋದು, ಯಾಕಂದ್ರೆ ಆ ಒಂದು ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ಸ್ ನೋಡ್ಕೊಂಡೇ ಇನ್ವೆಸ್ಟರ್ಸ್ ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ಬೇಕಾ ಬೇಡವಾ ಅಂತ ಡಿಸೈಡ್ ಮಾಡ್ತಾರೆ. ಸೊ ಫಾರ್ ದಟ್ if public accounting firms is required, and they assess, they do even do the financial reporting of the organization. So they are also one of the important players in the capital market. Next, depositories. So your demat account. So if you want to buy the shares, the shares will come in your demat account, dematerialization account. It is an online account. So this demat account is controlled by the depositories. ಈ ಒಂದು demat account ನ depositories ಗಳು control ಮಾಡ್ತಾರೆ. So we have two depositories in India. One is CDSL, Central Depository Securities Limited, and sorry, it is CSDL. It is Central Securities Depository Limited, and we have NDSL, National Depository Securities Limited. So these two are the two depositories we have in India. So they will control the demat account or the dematerialization account of the shareholders. All your demat accounts will be controlled by the depositories. Next, we have market regulators who will regulate the stock exchanges. We have Securities Exchange Board of India, SEBI. We have RBI is the Reserve Bank of India. DCA is Department of Company Affairs. So these are the regulators we have in India who will have the complete control, who will regulate the transactions of stock exchanges and the capital market. Next question, we have functions of capital market. It is a section B question. Acts as a link. So there are two people. One is savers and the investors. There are the people who wants to who have the money and who wants to invest the money. And on the other hand, we have people who don't have money, who requires money. So between these two people, the link itself is capital market. So in capital market, people will come and invest the money. So here people are there who wants the money, who will take that money also for the capital purposes. So it acts as a link between savers and investors. Incentives to investors. So the people who have saved their money, for example, if they have taken preference shares or equity shares, they will get the dividend. Okay, that is an incentive. Suppose if they have purchased the debentures of the company, they will get the interest on debentures. So for the savers, the people who have invested their money, they will get the incentives for whatever the amount they have saved in the organization. So these are the this is the incentive. So they will get the incentives for whatever the money they have saved in the organization. Next is stability in value of security. So what happens? This capital market will provide only money those who need it. So what happens? Unnecessary speculative activities. Speculation is you create sudden demand, artificial demand. Creating an artificial demand is speculation. So those speculations can be avoided. So the stability in the value of securities will be maintained in the capital market. Encourages economic growth. So what happens? The resources, the financial resources of the organization has been rationally allocated throughout the country. So this will even help in the development of trade and commerce because it will give the fund to the organization which needs capital. Even the savers, what do you say? The savers who have money, excess of the money, who are ready to save, the savings is not kept idle. The savings are mobilized, so it will encourages the economic growth. Even it will increase the GDP of the nation. Next, capital formation. So whichever the company it requires the money, it will invest, it will issue shares in the primary market, it will issue the financial securities in the primary market and get the money for that. So hence even it will develop or it will enable the capital formation for the organization. Next, mobilizes savings. Simply, if you keep the money with you, it doesn't fetch you any returns. If the savings are idle, it won't give you any sort of money. So, if the same money is invested in this financial securities, so what happens is you may get returns on that money, whatever you have invested, so that the money are not kept idle and you're even growing your money also. So it mobilizes the savings. Next is industrial growth. So what happens for the industries and the organization? They can issue the shares in the capital market. They will get the long-term funds. So they can have the huge amount of capital. So they may use this capital to expand their business, to make their business grow. This will enhance the growth of the organization. So capital market will support the growth of the organization. Next is domestic and foreign resources. So you may issue the shares in foreign stock exchanges. So you may have the investors in foreign countries also. So you can get both resources from India. So you can issue the securities in India also, Indian stock exchanges as well as foreign stock exchanges. So you have wide range of resources to get in. This is also one of the important question that can be asked for section B. Next, you have explain the functions of money market. So money market, you just when you listen to that word money market, the first thing it should come into your mind is the maturity period is less than a year. So let us check the functions of money market. First is short-term borrowing and lending. As you all know that maturity period is less than a year. So if a company wants short-term requires, means it may want certain money for only 2 months or 3 months. So the short-term needs of the business are catered in the money market. Price discovery. So the price is decided based on the prevailing market interest rate. So whatever the current market interest rate will be there, based on that particular parameter, the money market instruments rates will be decided. Liquidity management. So as we all know that money market instruments, whatever the financial securities is there, you can easily convert it into cash within a year. So you need not wait for more time. So it is easily, the financial securities can be converted into cash in less time. So it is highly liquid. So liquidity management function is also important for the money market. Next, financing trades and commerce. So what happens now, for example, there are even the international trade is supported. The international trade is supported. International it is. So you know that in a country import and exports happen. So this money market instruments help you to even fund this exports also, letter of credit. So bank will give an assurance that the money will be paid. So bank will give assurance. So this will help the exporter. So who are ready to export the goods, he will have assurance that he will receive the money. So this will even enhance the trade between countries. So it will finance even trade and commerce sector also. So money market plays a very crucial role in the exports and imports. Next, reserve management for banks. So as you all know that according to the guidelines of RBI, banks should hold a particular reserves. So it should have a minimum reserves. Suppose when a bank doesn't have resources, okay, it can use the call money to get the money from other banks, interbank transaction, or if it has more money, so it can even invest in this money market instruments where the banks can also increase their savings. So it is a reserve management for banks. Next, yield enhancement. So what happens usually when you compare this savings bank account and all, in money market instruments you get a higher rate of returns when compared to this savings and deposits what you do in banks. So the yield, the returns is more. Central bank operations. So what happens is central bank RBI uses this money market in order to frame the monetary policies, to control the inflation of the country, and to maintain the price stability. So money market function is also important in that aspect also. Support for government financing. Suppose if the government needs certain money, what it will do? It will ask the RBI to issue the treasury bills. RBI on behalf of government it will issue the treasury bills and collect the money and gives to the government. So even it will help the government to finance certain money through the money market instruments. So these are the functions of money market instruments.